Hey everybody, Boris, also BK Forex. Welcome to the weekly technicals for the crosses from May 21 to May 25, 2018. And we actually have a couple of repetitive ideas from last week because they've started to really develop. And I think they present even more interesting opportunities this week as the stories take full fruition. So let's start with what I have on the crosses. Back to the Aussie Kiwi. Aussie Kiwi, I was a little bit early to the trade, but it's finally starting to show the turn trade that I was talking about. Resistance 109, support 107. We'll take a look at the charts and I'll show you why I think it's an interesting trade. The biggest story that almost nobody paid any attention to this week was this massive reversal of fortune in Euro Swiss, which rejected the 120, and the risk aversion flows really pushed it hard to the downside. The story with Italy still, I think, is a slow boil story. It's not going to go away. It may be a little bit of a reprieve, but to me, the Italy story, which is essentially the story of the fact that the Italian new government is very much in favor of some sort of debt relief for Italy. Italy is the single largest, has the single largest debt to GDP ratio in the European zone and even in the industrialized world. All of that incredibly troubling for investors, and I think could be a big problem going forward, especially if growth in Eurozone slows down. So it may be a story takes a while to develop, but I really like it technically here, and I'll show you the charts. And the last idea here is the possible weakness, the continuous weakness of the caddy, which we talked about, combined with potentially a little bit of profit taking in the yen, which makes it, I think, of all the crosses, yen cross is one of the more vulnerable yen crosses to the downside. So let's take a look at the charts here, and we can start with CAD yen, because here's why. This is the weekly chart, why it looks vulnerable to me. This is a big flame out candle. We're ending up almost to the lows of the week. Kind of a nice reversal candle. Suggests that the 87, the high here is 86.78. So 87, pretty much the high against which you trade, with the potential to move down. Now, this is a slow motion trade, obviously, but there could be 50, 70 points to the downside here as the week progresses, especially if yen comes under assault, because it looks like dollar CAD really is not going to be sold. It's going to be bid all the way through. The other idea, of course, was an oldie but a goodie, was the Aussie Kiwi. Now, I was early to Aussie Kiwi last week. I said that it looks like it's starting to top out, but finally, end of the week, my analysis started to come through, and look at this massive reversal candle we just put into the end of the week. We're ending up on the lows of the week. This is really a rebalancing trade. It's not so much that there's a kind of a strong story there, but it's just a rebalancing. The Kiwi got grossly oversold on concerns over a little bit more lax monetary policy and maybe a little bit more lax fiscal policy. But ultimately, the economy, I think, in New Zealand is just as robust as it is in Australia. In fact, you can make an argument that it may be a little bit even more robust because it's soft commodities versus hard ones. And overall, I think you just simply the yield differential between the two is going to get rebalanced a little bit more towards the Kiwi. So there's a potential here, just simply from corrective trade flows, for us to take out the 108 level as we have a big turn candle on the site here. And then the last trade that we have here is, let me just find it over here. Sorry, I'm just looking for it over here. The Euro-Swiss turn trade, which is really, to me, the big story of the week, because this is a very powerful down candle. Now, what's interesting about Euro-Swiss, just from a technical point of view, is that these type of burst candles, these candles that are multi-volatility burst out candles, tend to have at least some, and sometimes quite a lot of continuity. Right? If you look at the chart here, whenever you have a strong candle, either way, there tends to be continuity. So here, the low was 108.50, and ultimately 2 weeks later, the low was 106.21 before we had a big reversal in July, right? Reversal to the other side. The high here at 13.89, and the next week we hit 115, right? The reversal here down to 1600. 2 weeks later, we were down to 1446. So the question is there a high probability, even here, just sort of a big burst out candle here, closed at 17, ultimately led all the way up to the 120 level. So the question is, do we have a reasonable chance here to make 1600? I think we do. And I think if I'm going to be trading just pure momentum flows, this seems to be a pretty good one. You really need like a complete change of sentiment in the euro and the Swissy to kind of turn things around. You have to have a sort of a la-di-da, everything, everybody's happy kind of a format. And given the fact that there's trade tensions with China, problems with NAFTA, and the new turmoil with Italy, Euro Swiss could really be the most interesting momentum trade of the week. So that's sort of my ideas here. I wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.